Almost 4 months after Ethereum's successful shift to a proof-of-stake network, the second biggest blockchain has passed another major milestone. More than 16 million Ether, worth over $22 billion, have been deposited into Ethereum's Beacon chain staking contract, according to Etherscan data. Joining us now with more on that subject is Brian Mosoff. He's the CEO of Capital. Brian, good morning. So more than 13% of the total supply of ETH is being staked. Why are so many people willing to lock up their Ethereum until the network's next big upgrade, yourself included?
Good morning, and thank you for having me. I mean, everyone in the Ethereum community has been excited about staking for a number of years. We finally did the merge event a number of months ago. Companies like ours, Capital, we've always said, if you're holding this asset, you want to make it productive. You want to generate yield, and you want to help decentralize this network and make sure that there's the maximum amount of participants, ensuring that you have security, processing transactions. So this is really exciting, and I would expect that there's going to be more institutions that want to hold ETH and make it productive, and then other individuals who grow more comfortable with the technology are going to do it because it's essentially the lowest risk yield you can generate. This is not a DeFi protocol that the smart contract you may have to worry about. This is what you want to do if you're just sitting and holding on these assets and take a long-term view.
So your company is one of the largest institutional holders of Ether and the first public company in the world to stake a significant amount of Ether to generate yield, betting 62% of your portfolio on ETH staking. What's the ultimate goal here?
I mean, for us, the ultimate goal is to get as close to 100% as possible. We have a three-pronged strategy. We want to be a net accumulator of ETH. We want to make that ETH productive. And again, capture that yield. What that will be, no one really knows. Last year it averaged about 5%. As more people stake their ETH, it may drop down. If there's higher network activity and people shift their focus away from other layer ones onto either ETH layer 2s or ETH at the base layer, we could see a spike in activity that's paying more transaction fees, and maybe we see yields go instead of lower, even though more people are staking, maybe they're higher than 5%. No one really knows. For us, though, we see an opportunity to use some of those revenues to generate tooling. A fun part and also a painful part about being public is we have a set of obligations that individual stakers don't necessarily have. I imagine that there's going to be a number of structured products that come out in the coming years. Maybe it's not this year, but in the next 2 or 3. And those institutions the issuers are going to need tools to monitor the behavior. We saw a lot of concentration risk, with FTX, where people just assumed that one custodian and one provider was good enough. We don't believe that's going to be the future. We think people are going to want multiple custodians, multiple staking providers. They're going to need a way to monitor those validators to be compliant with whatever reporting obligations they have in their filings. And so that's an opportunity to build that software and help more come to this ecosystem.
So now you guys are, of course, across the lake from New York, nonetheless, totally different rules, totally different laws. It might as well be a different country, apparently. But
I wouldn't say totally different laws.
But nonetheless, when we look at what's happening right now, when you're peering across Lake Ontario and you're like, what the hell's going on with the SEC and Gemini and Genesis, what does that mean for your fund? What does it mean for what you guys do? And can you explain how your business model is obviously different from what they were up to?
First, also, technically, I'm in New York here. I don't know if you could see the background, but this isn't actually from. I'm local at the moment, but I think that there's things that Canada, the regulators have done very well. We were the first in the world to have spot ETFs. The U.S. doesn't have that. There's still futures ETFs, but at the same time, we don't necessarily have the same offerings on our local crypto trading platforms. So there's still a lot of work to be done there. So I think a lot of people are quick to criticize, whatever jurisdiction they're in, and say that the regulators haven't yet found a path to offer various products and services. We're seeing what's happening right now with Genesis and Gemini, and some people may be frustrated by it. I think the people who take the long-term view of over the next 1 to 3 years, things will get better everywhere. There's pain points in every jurisdiction, and I hope that everyone works together. One thing I will say about Canada and the US is the SEC and the Ontario Securities Commission and the CSA, the Canadian Securities Association, they're very similar in their objectives and their approach. We haven't really seen the same type of enforcement or regulation or guidance by enforcement up in Canada. probably that's a good thing. But at the same time, you still have the same pain of local businesses who want clarity. We have a unique structure in that we're a corporation, not an ETF, but we are publicly listed. So we do have a lot of the filing obligations that any structured product would have. And that's a good thing. And we're a leader there, and it sometimes is quite challenging. But again, we hope that there's more people who look like us in the future, more people who can figure out how to work with the regulators, with the auditors, to bring these kind of access points to the market, because some investors are comfortable buying crypto and holding it on a ledger, software wallet, whatever it is. But then there's another group of investors who want an access point through a traditional brokerage account. And I think it's important that you offer both ends of that spectrum out to whoever wants to participate.
You're kind of like the Michael Saylor for Ethereum.
Yeah, I guess you could say that. Yeah. We have slightly different views than Michael Saylor, but
I want to give you a comment on competing layer ones like Solana, Binance Smart Chain, Aptos. When you're looking at the Ethereum ecosystem, trying to expand and compete.
I mean, I've been that guy who's been touting Ethereum as the thing for a number of years. It's where all of the most interesting development is happening. The 0 to 1s first appear there. I'm not that interested in other chains that are just copying the innovation on Ethereum and then trying to port it over. Cheaper and faster is not necessarily what this is all about. Security, decentralization, and trust, and innovation. And the best developers are building on Ethereum. I mean, will that be forever? Maybe they go somewhere else, but for now, I see no reason to believe that any of these competing layer ones are going to pull away that mind share. And now that we're seeing the success of layer 2s on Ethereum and rollups and zero knowledge proofs coming, there's a lot of really exciting tech that's going to give these other layer ones a run for their money.
Yeah,
so Shanghai's
like ZK development and such.
The Shanghai upgrade, the update, the Shanghai update. What are your thoughts on that? How are things going to go? I'm assuming you're bullish. I'm just taking a wild guess, but what's your take on it? What do you think is going to happen with it?
I mean, I think in terms of price, it may be an event, it may be a non-event. I always take a long-term view. I think it's important in that there's a lot of idle ETH that wants to stake, that watched the Beacon chain go live a number of years ago, and then the merge get delayed. And so they didn't want to have that lack of liquidity, so they decided to sit on the sidelines. And that still may be the case. We may be hearing that it's going to happen in Q1 this year, the ability to withdraw your staked Ether. When it finally does happen, though, I would imagine that more people will want to stake their ETH if they're sitting on it and not looking to trade it or move it into some other lending protocol. It'll be the beginning, I think, for anyone who wants to create a structured product and wants to bring that to market. This is one of the hurdles. Regulators are going to be curious, how do you get liquidity, whether it's daily or with redemptions? And right now, people are looking at derivatives of staked Ether, liquid staked Ether tokens. I don't love those. Personally, I think it just creates more leverage in the system. So I think that the Shanghai upgrade further proves that this community, this developer set can deliver these big technical milestones, much to the chagrin maybe of the Bitcoin community who says it'll never ship, it'll never happen. And so it's great. It's just further proof that this protocol is going to continue to upgrade itself and be the leader of the smart contract platform set of blockchains.